Good morning, everybody. Hope you had a great weekend on the University of Tennessee's football team. One thing you can always count on every game is they're going to be out-coached, and it's just a lot of talent there. Have the ability to win, but the coaching is less than to be desired. We'll start with our disclaimer. Hypothetical or simulated performances also have certain limitations, unlike an actual performance record. Simulated results do not represent actual trading. Also, since the trades have not been executed, the results may be under overcompensated for the impact, if any, of certain market factors such as lack of liquidity. Simulated trading programs in general are also subject to the fact that they're designed with the benefit of hindsight. No representation being made that any account will or is likely to achieve profit or losses similar to those shown. Well, we start the week with Wednesday hanging over the market. FOMC announcement and press conference. So we've got a chance for a whipsaw. So the trading opportunities off the FOMC announcement probably are negated by Yellen's press conference that follows at half hour after the announcement. Interest rates, the game that's being played right now unchanged through the end of the year. Taper to begin in October, and it won't be by selling markets on the securities on the open market. It'll just be by letting the treasuries, the notes and bonds, etc., that they hold mature, and then not rolling them over and putting them back in the portfolio. Equities around the globe are up, following the U.S. lead where new contract highs were made on Friday. So we finally busted 2,500 on the E-mini. It's a number we've been talking about since May. You go back and the play has been to own 2,500 calls, and if you're in 2,500 calls, we've gotten there. Roll it to the 25 calls. That's the game that we play. I could find little hard news over the weekend. Today's news, housing market index. $68. So the focus, direction of the E-mini, and if 2505 comes out. Oh, here we sit. The high volume number has pulled us to it. Because of the FOMC, I think we're in a trading range conditions until Wednesday afternoon. So should have pretty good support at the buck. Should have pretty good resistance starting at 16, and right here we are, right in the middle at 08. So buy number one's the buck to 04, 25 to 29, buy two. Sell number one is 8 to 12, followed by 15 to 19. Would like to execute in our number two levels, but I don't know if we can get there. I'm sure the volatility will be wanting this morning. I tell you, college football is just really hard to watch because of all of the blown and missed assignments after you get used to the pro game. And I just it's going to be pretty easy to cut the cord and figure out other ways to watch them. And I don't mind watching on replay because of the lack of commercials. You can get through them. Well, 155 even is resistance, so 55 even to 04 is number one. 7 to 11, sell one. 15 to 19, sell two. We have 16 to 20. Well, we'll make it 20 to 24 is number one. Buy 13 to 17. Buy 1 to 5. I think the risk in treasuries is to the downside because of the taper. And they might, I'm sure there'll be language that will raise interest rates in December if the if the economic data warrants. But the interest rates staying the same as they are right now without a raise in December is what the market's playing on. But so I think the risk is to the downside on treasuries. The market thinks that too because they're heavily hedged. Gold is lower. Equities are higher. No need to own gold, right? So we have this volume at 15. The low volume numbers at 7 down here. So 5 to 10 is probably pretty good support on gold. High volume number at 14, so we'll make 13, 15 buy 1. And we'll make 8 to 10 buy 2. Let them get stops below 10. On the sell side, 20 to 22, 24, 26. No reason to own gold. Market's going lower, right? I mean, the market's going higher. Euro was higher when I looked at it this morning. Got a seller 15 to 25, 40 to 50, kind of where we've been. On the buy side, 75 to 85 buy 1, and then 50 to 60. Again, it's kind of where we've been on this one, this particular contract, so nothing has changed there. Crude oil's up. Several articles out at the end of the last week about how the growth in the European economy, after being on hold for 10 years, is finally returning and starting to accelerate. Things are starting to look good. Add 50 points to your support and resistance numbers from the October contract. October will October will still have more volume than November, but November should catch the volume when the day session opens. So 50-25, 50-50, sell 1. 50-75, 51, sell 2. On the buy side, expiration usually favors higher prices, so we'll go 49.75, 50 buy 1, 49 1/4, 49.50 buy 2. If the world's economy is starting to grow, and there were several articles out last week saying that it was, the demand for crude oil should start to rise. And the supply imbalances, as long as Saudi Arabia holds back, will be absorbed by the marketplace. With the cutback of 600,000 to 900,000 barrels in the month of August, supply was down by about 75,000 barrels in September. So somebody is taking advantage of Saudi Arabia's goodwill, and I think Saudi Arabia has accepted the fact that they're back to being the swing producer. If they want to keep oil in the 45 to 50 range. Well, the ES finally made it to 2,500. Took a while, didn't it? But it's there. It's a brand new high. Market is pointed higher. the structural buy would be at 24.98, a tick above the 97.75 that we had on Friday. Don't know if we can get there, so we'll make 01s to 99s by one, and then 95, 97 by two. It's okay to sell failure to take out 05, but I do like the long side of the market, so we'll put 9 to 11 as sell 2. No news to drive the trading today. A little profit taking if we don't take out 25.05 is what I would expect. But we don't have a lot of interest in being short. That day will come, but I don't see it today. Okay, it's going to take a bit to get everything up and posted. I'm going to get busy on that. I will be back with you as soon as possible.